Hello and welcome to the weekly wrap video. Just a couple of things to brief you on then from the past 5 trading sessions. There's been quite a few focal points of the past 5 days, not just focused on the West, but also on Eastern Europe and specifically China. But I'll start off with the Ukraine. We have a new interim governing coalition within Kiev as the former President Yanukovych is forced to flee Kiev and in fact the country for fear of his life after activists managed to push the cabinet to the brink of collapse. As such, this interim governing coalition will look to pave the way for general elections in the country on May the 25th of this year. However, all is not settled as the Crimean Peninsula has been subject to a lot of civil unrest as the parliamentary building and alongside the latest report, some of the airports in Crimea have been seized by as yet unidentified gunmen that are assumed to have a pro-Russian stance. This is as they hoisted a Russian flag to replace the Ukrainian flag above the Crimean parliament. As such, this does throw the future of the region into some doubt, as it could potentially, in a worst-case scenario, result in Crimea themselves defecting away from Kiev and potentially siding with Russia. So despite the cabinet being forced out in Kiev, this does not mean an end to the troubles over in the Eastern European states. That has had a bit of an effect on the likes of the Russian ruble and the Hungarian forint over the past couple of weeks, specifically the Russian ruble, which has weakened to close to 2009 lows against the basket of the dollar and the euro. Turning our attention now to China, this week has been a very volatile one for the Chinese yuan, which has seen its single worst 5-day trading period since the currency's inception over 100 years ago. This is as we progress in towards the NPC meeting next week, where there are now wide expectations that the Chinese authorities could move to widen the dollar-yuan trading band from 1% to as much as 2%, which would be quite a liberalisation for the forex regime over in China. But ahead of this, you would expect the yuan to in fact strengthen on the back of hot money inflows into Chinese assets. However, this has not been the case, as many see the PBOC as engineering the yuan's decline in order to press out any speculative investors ahead of any potential move on the forex regime itself. Just turning our attention back to the Western world, though, we have seen Eurozone CPI estimate today coming in above expected. That was at 0.8% against forecast 0.7%, really bucking the market expectations of a lower than expected reading after declining CPI in Germany, Italy and Spain just over the past 2 days. This does give the ECB less pressure to conduct monetary easing next Thursday. As such, the euro rallied to 2014 highs just this morning, well above 138 at the high point of today's trade. And then just turning our attention back to the US, we saw a lower than expected GDP for Q4 revision out of the US. That's down to 2.4% against expected 2.5%, as consumption really takes a hit as we're heading towards those polar vortex seasons we saw in the early weeks of January and the late weeks of December last year. This all comes ahead of a very busy week. Next week we have a number of central bank meetings: the Bank of Canada, the Bank of England, the ECB and the RBA, to name just a few, all ahead of next Friday's non-farm payrolls. But of course, it will be a full rundown of all of those releases on Monday when I see you again for the week ahead video. In the meantime, that's all from me. Make sure you have a fantastic weekend.